From the studios of Farm Journal Broadcast, this is AgDay.
Coming up on AgDay, Wisconsin is known the world over for its cheese, and not just the kind you eat.
It's a pride thing for not just people from Wisconsin, but it's a Midwest thing.
We celebrate all things cheesehead. Now that there's a deal, how soon could we start seeing those big ag buys from China?
They're going to start to playing well together rather than fighting.
And a developing story we're following, a possible effort to get a trade deal on a new front.
They will announce a mini trade agreement.
Good morning, I'm Clinton Griffiths. Farm Journal's Jim Wiesmeyer is reporting President Trump is planning a visit to India. The goal, to open a new market for American products, including agriculture. Wiesmeyer telling AgriTalk's Chip Flory a deal may already be in the works.
They will announce a mini trade agreement that will include access to U.S. produce and dairy products in particular. India wants the U.S. to roll back higher tariffs on steel and aluminum products.
We've done, frankly, very little. We haven't had the same trade relationships. There have been a lot of barriers there. I am hoping and I'm expecting that we can make some progress with India in agricultural products and trading relationships that could be the next China of the next 20 years.
So far, the White House isn't commenting. Indian officials have said the visit could take place next month or in March. $40 billion a year. That's how much U.S. agriculture China is supposed to buy under the new Phase 1 trade deal. But with no new reports of ag buys involving China as of yet, and the deal being short on specifics, the futures market reaction has been mostly negative. Farm Journal's Tyne Morgan joins us from our Kansas City studios. Tyne, economists you're talking to say there's a lot of potential yet with this deal.
Yeah, thanks, Clinton. There's a lot of debate on what China will buy and how much, with no sales of substance on the book as of yet. And that's what's produced some doubt over this trade deal. But in talking with several economists, they say the deal has the potential to be monumental. It just may not be in a mix of agricultural goods and commodities that traders are expecting. As the scope of the Phase 1 trade deal continues to sink in, the commodity markets still seem skeptical. But John Payne of Daniels Trading says you can't discount how large of a deal this could be.
It's huge. It's a huge deal. They're the two largest economies. They're going to start to playing well together rather than fighting.
American Farm Bureau's Veronica Nye says it's not just a question of what China is going to buy, but when.
So if the markets were expecting, the agreement would say we're going to buy X metric ton of soybeans by this date. It just didn't happen. And so the way the deal's structured, it may not be until the end of this year before we truly see some large purchases that would go on to fulfill that $12.5 billion increase over the 2017 levels.
Purdue University economist Holly Wang says traditional U.S. agricultural commodities should benefit first. Then the mix of goods heading to China could spark new interest.
But it also opened doors for newer commodities, and especially processed, higher value added commodities. So the industry need to really grasp this 2 years to have its feet set in Chinese market, because after the 2 years, they will have to compete with everyone else.
Nye thinks whether it's core agricultural commodities or more specialty goods, there's room for growth, especially when it comes to dairy and the U.S. export market share into China.
That's an $11 billion market, and we only have a 5% market share. So seems like there should be some opportunity there. The EU has 50% market share.
And New Zealand had 38% market share for dairy in 2018.
If you just displaced the Kiwis, that's $4 billion there.
Nye says it's not just dairy. The U.S. share of vegetable exports to China is only 5%. That's an area where Thailand has 69% market share. And for soybeans, the United States' 18% market share in 2018 pales in comparison to the 75% for Brazil. Now, Clinton, it's also key to remember we are quickly approaching the Chinese New Year. It kicks off January 25th. And during that time, many of the businesses and factories are shut down. This means buys from China could be quiet over the next few weeks. Reporting from the Kansas City studios, I'm Tyne Morgan for AgDay.
Thanks, Tyne. Some countries apparently aren't liking the new Phase 1 deal between the U.S. and China. The European Union threatening to challenge it at the World Trade Organization. Some critics question whether the purchasing commitments violate the WTO's most favored nation rules. Those rules require WTO members to treat trading partners equally. But U.S. Trade Representative Robert Lighthizer is dismissing any potential violation, saying China will buy what it's going to buy, and the deal does not say not to buy from other countries. Now, it's believed President Trump will sign the U.S.-Mexico-Canada trade agreement tomorrow. That's according to Farm Journal Washington correspondent Jim Wiesmeyer. It comes after the U.S. Senate approved the deal last week. It next must also be approved by the Canadian Parliament. It isn't scheduled to be in session until next Monday, when its House of Commons is expected also to approve it. The deal has already passed the Mexican legislature. A powerful winter storm spread snow and ice across the northern plains, Midwest, and Northeast over the weekend, and some of the effects are lingering into this morning. Meteorologist Mike Hoffman joins us with more. Mike.
Yeah, that's right, Clinton. Most of that storm offshore. We're still seeing some lake effect snows with the northwesterly winds across the Great Lakes. That's a quick shot of Arctic air. Models are actually bringing in the milder air once again across the plain states by the middle of the week. And you can see as we head into the middle of the week, another storm system coming through the northern Rockies. We'll talk more about that coming up. But before and after the storm are some of those beautiful sunrises and sunsets. I just can't get enough of farm country with the weather behind it, whether it's a sunrise, sunset, or a gentle thunderstorm off in the distance. This one captured by Amy Harsh of Wood River, Nebraska. Beautiful scene there. I'll have more in your forecast coming up in a little while.
Want to slow the aging process? Well, a new study says it may depend on the milk you drink. Researchers at Brigham Young University say people who drink low-fat milk experience several years less biological aging than those who drink high-fat milk. They looked at the relationship between telomeres and how much milk people drink. Now, telomeres are the nucleotide on the end of the human chromosome. Now, each time a cell replicates, we lose a bit of those end caps. Researchers say they found the more high-fat milk people drink, the shorter those end caps are. They say the difference added up to more than 4 years in additional aging. Markets reacting with skepticism following that Phase 1 agreement with China. We'll talk about that and expectations for 2020 next in analysis. And later, so much more than foam. The story behind the cheesehead in the country. China's economic growth sank to a new multi-decade low last year. The world's second largest economy grew by 6.1%. That's down 0.5% from 2018. Chinese exporters have been hit by tariff hikes with the U.S., but a bigger blow to the economy came from weakness in consumption. The trade war also added to pressure on Chinese leaders struggling to shore up growth and rein in surging food costs after African swine fever slashed supplies of pork, sending prices soaring. And according to the National Bureau of Statistics, China's pork production was down more than 20% last year. Data also showing the hog herd at 310 million head. That's down a whopping 27% from a year ago. Corn futures clawing back from losses suffered last week. Here's an update on where things are starting this week from the CME.
Today in the grain market, beans were a little bit mixed. I think the futures did stabilize a little bit after that sell-off yesterday, but it looks like Phase 1 the deal is not paying off like they would hoped. The traders are really worried that the language is really going to hold up any kind of real buys, and there's a lot of loopholes in there, and that has some traders like kind of wringing their hands and a little bit worried. That's why I see the market kind of stalling out. With that big sell-off in corn, we did get some recovery today. We're up double digits, almost 12 cents, which is really promising right now, but we're still like waiting to see if we can kind of breach that $4 mark. Until the rest of the details really are revealed, we're not really sure which way this market's going to go. The cattle was very steady today. It seems like there's been a medium kind of cash trade right now, and the winter storm ahead is definitely add a little bit of pressure to the market. Now, the idea is that it's going to slow down some of the movement of cattle, and then that's going to kind of pile up supply. applies. That's kind of the thinking of it that makes it difficult for any of the cattle to really get out of the feedlot. That being said, the market's still relatively strong.
Joining us in studio today, we have Tommy Grisafi, Advanced Trading. Tommy, let's talk about this market reaction to the Phase 1 trade deal that we signed with China. Boy, it seemed like there was a lot of skepticism, at least in the direction that the market traded following that deal.
Right, so we signed the deal. No major purchases were announced.
Right.
We're coming into the Chinese New Year. They're going to celebrate for a few weeks. We don't know what we have. I didn't have time to read 99 pages, and I doubt you did either.
Right.
But there's no guarantees that they absolutely have to buy this stuff. And if you ask me, if we were here standing here 3 months from now or 6 months from now, they're probably going to buy a lot of stuff. But what's China great at doing? They love buying low. And when it gets too high, they decide they're not a buyer. So one of the things in the deal was we had to stay competitive. And we're not going to sell them $10 beans, and South America is going to have $9 beans. So we need to stay competitive. Typically, American grain costs a little more than other countries of origin because we tend to get it there, higher quality, get it to them when they need it.
Right.
China's going to become a good customer again, in my opinion. If they don't, I guess that's the president's problem and America's problem. I hope they're somewhat good on their word. I usually think when someone says something, believe about half what they say. If they buy half as much as they say, I still think we're in a better spot than we were.
Well, and absolutely. You know, and I think we forget a lot of times in these negotiations and over the last 18 months how good a traders China actually has been. I mean, they're pretty savvy.
They're the best traders in the world. They know what they're going to buy, and they get to decide when they want to buy it. They're more than welcome to trade our futures and options. If I had to guess, I'd be scared to hold grain too long because if we do plant big acres, I would say China's waiting to see how the South American crop finishes up, what we plant and how our crops look, and then, of course, we have the election. So they have the money, they need the stuff, but they don't have to buy it all on the first day or the first week of this trade deal.
So if you look out 2 weeks, 3 weeks, 5 months, what do you expect to see?
I'm going to keep an eye on the PNW and watch how the bids are coming in. I'm going to keep an eye on the cash markets in the Gulf. Although we trade futures and options, the whole world's not based at the Board of Trade. When China comes to buy it, they're going to buy the actual cash product, leaving this country somewhere. Keep an eye on those cash markets and also South American cash markets. See if that spread turns, where they're not selling as much and we sell a lot more. But I think they need grain from both our countries, to be honest with you.
All right, appreciate it. Thanks, Tommy. Thanks for the insights. We'll be back with more Ag Day coming up just a minute.
Interested in spending a day with a trader? Call Tommy Grisafi at 800-664-4383.
Meteorologist Mike Hoffman joining us now with a look at our national weather. And Mike, over the last couple of weeks, we've seen kind of this rainy pattern kind of move across the same areas.
In these, you're absolutely right. Now, the way we do our calculations, this takes into account more the previous storm from a week ago, Saturday through this past Friday. But with the storm this past weekend coming through, next week I'll be showing you a similar picture more than likely with some moisture into these same areas. Now, in this particular case, again, most of this was from that storm a week ago. You can see very heavy amounts from the panhandle of Florida across many parts of Alabama, Mississippi, into northern Louisiana. That extended northward into the central Mississippi Valley, many parts of Missouri, except the northwest portions, into Illinois. Now, as far as the root zone moisture, those areas didn't need it. We're still seeing a lot of moisture across the Corn Belt, across the center of the country. Kind of a few areas of dryness and wetness along the East Coast, nothing major there. The other large area of dry weather, at least according to the root zone, that level of moisture in the upper parts of the soil in the Pacific Northwest. Now, drought monitor, the longer term drought situation, we're still seeing the pockets, parts of Texas, parts of the Four Corner region. None of these are really bad except for a few spots where you're having a severe or extreme drought. But overall, you can see most of the country definitely not concerned about drought at this point as we head through the rest of winter. Now, the jet stream starting this week, you can see a trough moving through the northeast. But look at that. By Wednesday, already seeing a weak ridge into the Great Lakes once again. That will kind of shove the Arctic air back into Canada once again. Now, that's a pretty potent storm system. Same timing. I don't know if we're getting into a pattern or not, but same timing. Friday, Saturday for the middle of the country. That's one we'll be watching for you, obviously. Now, temperatures this week, I am going above normal from Iowa back through the Pacific Northwest. I'm going below normal in the eastern seaboard because you'll start off colder than normal earlier this week, but you'll end up a little bit milder than normal by the end of it. averaging, I think you'll still be slightly below normal. Above normal, though, for moisture, you can see from the lower Great Lakes all the way to the Gulf Coast. Below normal for the northern plains, southwest, and above normal for the Pacific Northwest. 30-day outlook for temperatures. I still think we'll see some incursions of Arctic air, so below normal for the northern plains, central plains, Great Lakes, above normal Gulf Coast area, also below normal Pacific Northwest, below normal moisture, northern plains, the west, and then you can see from the east coast all the way to Texas, above normal expected. That's a look across the country. Now let's take a look at some local forecasts. First of all, Phoenix, Arizona, variably cloudy with some sunshine, high temperature of 74. International Falls, Minnesota, very cold, lots of sunshine today, high of 7. And finally, Columbia, South Carolina, partly sunny and chilly, high 48, then a freeze tonight.
A driverless tractor? The future now, a reality. We'll tell you about the latest concept from Kubota next on AgDay. Plus, Machinery Pete.
Hey, stay tuned, folks. Coming up, I'm going to tell you about a rare combine selling at auction next week. Hardly any hours on it.
In today's America's Conservation Ag movement, check this futuristic concept tractor out from Kubota. The autonomous tractor is called the X-Tractor. The battery-powered tracked machine was first shown at a new product exhibition in Kyoto City, Japan. Kubota claims the concept is a zero-emission vehicle using a combination of lithium-ion and solar batteries. Now, the company claims artificial intelligence allows for stable, autonomous driving even on wet paddies and uneven terrains. The X-Tractor can change height to either lower the center of gravity or raise the operating platform above crops. There's no price tag on this yet since it's a concept tractor. It's not new, but an almost new combine caught Machinery Pete's attention this past week. Here's Pete.
Okay, folks, let's talk combines. Now, last Thursday on a farm auction in central South Carolina, this very sharp 2011 John Deere 9770 STS with only 822 SEP hours on it sold for $146,000. Very strong price. In fact, that's the second highest auction price I've seen the past 14 months on a John Deere 9770. So kind of doubly impressive that this one came out of the deep south. Now, the only higher one I've seen the last 14 months actually was last month, December 7th, on a farm auction in west central Indiana. Here's a picture of it. Another 2011 model. This one had even lower hours, 649 SEP hours, sold for $175,000. So yes, the very nicest ones are attracting a ton of buyer interest, selling for premium prices. But if we pull back, the average auction price on the John Deere 9770 STS last year fell almost 9%, down to an average auction price of $78,886, and that was down from the previous year of $86,607. Now, folks, coming up this week, there's one combine I really got my eye on. It's selling on a farm auction in Huntington, Indiana on Friday, sale by our friends at Sullivan Auctioneers. Here's a picture of it. It's a 2014 John Deere S650. You don't see many of these things around, and this thing only has 8 separator hours on it. Now, the highest auction price I've ever seen on an S650 Deere is $186,000 just over a year ago, online auction, East Central Nebraska. That was a 16 model with 344 SEP hours on it.
Wisconsin is known for its cheese and also for its cheeseheads. Hear the amazing story of how the first cheesehead was created next. There's no milk, bacteria, fermentation, or refrigeration at one Wisconsin cheese factory. That's because it makes foam cheeseheads. And they're a hot item right now thanks to the Green Bay Packers making it to the playoffs. Ralph Bruno invented the oversized yellow wedge hat in 1987 from his mother's couch stuffing. And it has since become a popular headpiece, particularly for Wisconsin sports fans. In addition to cheese heads, the company makes foam products including bow ties, top hats, wine toppers, baseball caps, and corn-shaped hats. The company, Foamation Incorporated, gives factory tours where people can make their own cheese heads. Tourgoers even take a wedge of allegiance.
So if you could please raise your cheese-eating hand and say, after I do solemnly swear.
I do solemnly swear
to listen to my Commander-in-Chief Carol.
to listen to my Commander-in-Chief Carol.
It's a pride thing for not just people from Wisconsin, but it's a Midwest thing, and it's a way to, for people to get attention in a positive way. And it's always been a positive thing, despite that it was a derogatory name early on.
Bruno says he doesn't know exactly how many have been sold, but he says it's enough to line cheeseheads from New York to the West Coast. That's all the time we have this morning. We're sure glad you tuned in. From all of us here at AgDay, I'm Clinton Rivas. Have a great day.